Good morning, everybody. Welcome into another live stream here with the Everyday Growth Advisors. Hope you are having a good morning. Hopefully you can hear my voice and everything is fine and dandy. Welcome into the stream. We have another week here, which is coming to a mid-week update. So we're going to kind of stream through here and give you guys the lowdown. Now, we crossed over the key bulls pivot about 2 days ago, and we've been holding above it pretty strongly here on the 3950, heading into Monday and Tuesday. The trading session has been kind of choppy, and as expected, as I told you guys, after a python swallows a gazelle, it has to take some time to swallow and digest its food. And that's what's kind of happening over here. We're seeing the S&P 500 go through a state of equilibrium in terms of supply and demand. Bulls and bears are fighting for their positioning, and the result of that has been pretty much very, very sturdy chop. We had both a breakout to the upside and then a very aggressive sell-off on some news yesterday for missiles going into Poland, something along the lines with the war escalation, and that was what caused a little bit of jitters in the market. At this point, I'm not very sure if we are actually going to go and rally up to the 4150 level as we have previously discussed. It does seem like the market is very much so trying to reject the 61.8 level at the 4005 SPX, which is equivalent to where SPY 400 is pretty much the psychological level for SPY. Which is $400, has been a very key level, in this little saga. The same thing's pretty much seen on the NASDAQ. And remember that the NASDAQ is the one that is mainly driving the price action here, which is causing majority of the market to lag behind. And as long as tech remains weak, it's very unlikely that we, continue to see these upper bounds being tested. We haven't even reached the key pivot point for bulls on the NASDAQ yet. In fact, we're still just pretty much in a state of just sideways movement. We had a little bit of a buy up, obviously 2 days after the huge CPI rally, but then right after that, we've really just seen more sideways action and more chop. Not to mention, we have small caps that have also been choppy and starting to see a bit of a rejection here. We were hoping to get up to 190 before seeing a rejection, but we really just mainly got to 189.50 and then saw a big rejection on IWM. I would be inclined to possibly see if we can get some short positions on IWM below 185 or so, to take a downward move, calculate a downward move into 180 or so, maybe sometime at the end of the week or sometime next week. As I mentioned, on Monday and Wednesday's, Monday's live stream and Friday's live stream last week, that we are likely to see these 2 days in this week to be like pretty much bullish or sideways, and then Wednesday, where after lunch we're likely to see some kind of coverage of gamma and into OPEX, which is this Friday, for dealer exposure to be rolled. And we've already been seeing a lot of rolling. Questionable Apple puts have been bought, questionable Tesla puts have been bought. A lot of the flow is it's interesting, not to say the least, that's for sure. Dollar index continues to head lower here, but then at the same time saw a big little pump yesterday on this little sell-off. So we might have snagged a little bit of a liquidity zone right there, which was, in that 105.30 level. We might see that interim movement to the upside from the dollar, and that might cause a little bit of volatility for stocks. Remember that the VIX still pretty much trying to claw its way back up into the $24-25 level. And yesterday we had a big spike upon that news for the VIX getting into the $26 level almost, sending volatility up. So we'll be continually watching the VIX here. As I've mentioned, 23.89, very key level for the VIX, or rather $24 roughly. And we didn't really get down to 21.50 or 21-ish, which was the next key level for the VIX to start to go into bullish territory. This is, remember, I've put these here for you guys so it's easier for you to understand. 21.18, 21.19, and 17 are VIX green levels, which means to say these are VIX bullish levels for the SPX, and then you have 23 where things start to get a bit shaky. 26, 28, these are where alarmist levels of volatility start to come in. So this is high volatility, this is low volatility. It's just very easy to look at it this way. I have it all color coded, so I don't need to think much about it. I see where we are, and that's it, right? Semiconductors, after a huge rally, we spoke about this multiple times in the past couple of weeks already, we've seen pretty much at this point a good indicator for a possible pullback here. Pretty much yesterday with NVIDIA and AMD failing to break out further. We did kind of see some new price action to the upside, but then, in the end of the day, didn't really get there, and then we're starting to see some little pullbacks here. So NVIDIA might be a good short position today, if only we can get a retest of these upper levels. Ideally, we really want to come up and close this gap at about 164, and then continue the downward trend here on NVIDIA. Since it's been bought up pretty aggressively on the 4-hour, we want to see some pullbacks. So remember, trade what is overbought and oversold. You don't need to complicate your trading life. Have the right risk to reward ratios with the best things, where you can take confirmed trades in the opposite direction. That's the way money is made consistently, right? The usual suspects: Microsoft, Amazon, not really much to talk about there. Apple also not much to talk about there, to be honest. We did see a lot of bearish flow on Apple though. 150 puts for May next year have been slammed on the open interest over and over and over and over and over again. It's actually quite frightening to see how many of those puts have come in. It's close to about $20 million at this point. And then not to mention JP Morgan here and financials, which I've been talking about. We've been waiting for this sector, financials, to get overbought for a little while. So we played the bullish move to the upside. Now we're looking for pullbacks to play the bearish move to the downside. And so we really want to see a move below 130, 150 to play this downside for intraday trade, or I wouldn't swing these contracts or this stock, to be honest. It's very unpredictable at this moment. Obviously the new kid on the block is China, right? A lot of, I want to say, optimism driving behind the price action in this space. And one of the stocks that we're watching here is Baba, with a very, very nice breakout and continued momentum. Remember, when Baba wants to start rallying, it can really get crazy. So it's had 2 back-to-back days of more than 9 and 10%. And now today, pre-market, it's up just a little bit as well, about 1% or so. Yeah, 1%. and we'll see if we can continue to find any momentum. That will be another possibility for us to look into opportunities in this sector. Chinese stocks have been taking off lately. Look at the Asher ETF and also KWEB, which is a proxy in equivalent. This is kind of like the China's Nasdaq. KWEB is almost like China Nasdaq or QQQ. And Asher is the Dow Jones Industrial Average. You can pretty much compare it to that. And then you have HSI, which is pretty much like the S&P 500 for them. GXC is like the ETF. So this is like Hang Seng Index ETF pretty much. So this is like SPY. This is S&P 500. This is Dow Jones, and then this is your Nasdaq. So you should, it's always nice and good to know what these things are, so that when you're looking at them, you don't get confused. Now, the other sector that we're waiting to see some pullbacks on is oil and gas, and it's definitely a sector that I'm keeping my eye on as there's news developing from OPEC's. And when I say OPEC, I don't mean the options expiry. I mean OPEC, which is the oil petroleum conglomerate, right? Which makes up of Mexico, U.S., Russia, Saudi, Venezuela, a bunch of countries that produce oil, right? And if there's news that they will keep supply the same and demand starts to head further down, then oil prices might start to come down. So that might be a temporary thing. Of course, the market has already priced in at this point the fact that winter is going to require a lot more demand than demand and supply. So the entire curve is going to shift to the right pretty much, and that's likely to cause a little bit of price stability in the next couple of months, heading into January, February, when winter gets into peak. So I'll be watching XOP closely to take a short position only below around $156. To possibly play a retest down into the 150, like the low 150. So that's another sector that I'm looking at. If you have any tickers you want me to break down, you want me to talk about anything else, or you have any questions, post them in the comments right now so I can take care of it. And also, thank you guys very much for attending the stream. I truly appreciate your taking out the time to be here. Make sure you hit the subscribe button and like if you can take your time out from your busy day to just hit the like button. It would truly make my day and help this stream reach more people. So I truly do appreciate your help with that. So let's break down the technicals here. In terms of SPY, I forgot to do that earlier. Does look like we are rejecting here. A pullback to 3,900 would not be unusual. We got a very minimal pullback on SPY the start of this week. I think it was on Monday or Tuesday. Yeah. We got a pullback to 395, and that that was one level that we were looking at, but then our ultimate level that we spoke about on Monday was 390 and 385, right? 384, 385, and then 390. That was the main levels. So we're really looking to come back down to 390. If we can get 390, that would be nice. There's a big level here, which is going to be a defense. And then below this 390 level will be the 384, 385 level, which is going to be a bit further down. So these two levels are going to be the key levels for us to watch on SPY. That equivalent on NASDAQ is pretty much going to be 3,900 and 38.50, 38.40 to 38.50, pretty much somewhere around there. Okay, so make sure you keep your eyes out for that. A break below 39.40 pretty much on SPX is going to give you that downward move. Hopefully we get some volume momentum behind it, but also be careful of traps, because we've been seeing a lot of traps. So if we see continued traps, we really need to break below this level in order to see that movement. Okay, so please wait, don't immediately short or don't immediately go into these positions. Give it some time. And that's all I have for you guys. 2 minutes till market open, so let's get this bag. We're going on the Discord to trade live with the team right now, so I don't see any questions. I don't see no ticker requests. Once again, thank you very much for attending. We'll see you back on Friday for another live stream. And yeah, I hope you have a great trading session. Tesla, okay. Sorry, I was just about to get out. Okay, so Tesla, my bearish thesis still holds, and I have a bearish position on Tesla open. It is in a bear flag and a ascending wedge pattern. Yesterday at the $200 level was a really great level to enter short once a rejection happened, but you might not be too late to the party. Playing the 190 rejection, or once it breaks down, wait for it to break down and pull back up to either reject at around 193, 192, or 190, and then play this downward move all the way down. Your first target should be 186 or 187. Next target should be around 184 or 183, and then your last target should be about 177 or 178. So there's three really great targets here for intraday trade if Tesla really loses it, and that should be your game plan with Tesla. I have 150 puts for I believe December. Yes, 150 puts for December is what I have. All right, so I hope you guys have a great trading session. Thank you for requesting that ticker breakdown, and have a great day, guys. I'll see you back on Friday, and we'll break the market down again. Bye.